Hello and a warm welcome to this quarterly update with SKAGEN Kon-Tiki and Portfolio Manager Kristoffer Stensrud. First, Kristoffer, SKAGEN Kon-Tiki is slightly behind its reference index. What happened in the first quarter?
We had a very difficult start of the year up to end January. The market was still in very sharp risk-off mode. We are not seeing anything in particular on the company side, which explains, but some of the most active markets or positive markets in the course of the first quarter was Brazil, where I've been slightly underweight and where it was the very highly leveraged companies which performed due to the stabilization in currency, mainly on political terms, not very much on the company side. So it was what we call it a macro-driven market, and that's not our particular strength, to put it that way.
Now let's turn our focus a bit to emerging markets. They have been out of flavor for a few years now, but there are now signs that that is about to change. Would you say that emerging markets are turning out of the woods?
I'm not quite sure. I think what we are looking at is to analyze this movements, or what you call it, the last 5 years underperformance. It's mostly due to relative currency rates, which is off by some 30% in this period. That has created two problems and two possibilities. The two problems are, of course, they are less attractive from an international point of view, since the value of our investment is falling. The other problem is quite a few companies have a lot of foreign debt, which is getting more expensive to service. On the positive side, they're getting more competitive, and that will in the end increase their return on capital going forward. So it's some possibilities and some threats. And we are now, for the first time in the course of the first quarter, mainly due to this change or stabilization in the emerging market currencies, we're seeing upgrade of earnings, which means better return on capital. And I think that will be the main theme going forward, which means if you are getting a renewed weakness in emerging market currencies, that will, with some certainty, also hit the sentiment for emerging market equities. On the other hand, we are seeing a good competitive and valuation perspective going forward, and the attractiveness and the discount to the global equities are still quite substantial, but the dynamics seems to be changing as we speak.
What have you done to the portfolio to meet these rather volatile markets?
What we have done is increasing the focus on company which controls their own destiny. We have been fairly reluctant to take on companies with a lot of debt. We have been fairly careful in having companies which are exposed to major macro trends. We are more in this, or over the last 4 or 5 years, we have been focusing more and more on the companies and less on the external factors. Because we have found out that we are better in judging companies than guessing oil prices, commodity prices and currencies. So our focus has been, where do we get the best and highest quality investment exposure at a decent price.
Okay, so looking a bit ahead, in your very experienced view, what will affect the portfolio going forward?
Of course, these macro trends will will have the major impact in the short run, but looking forward, we think the companies we own, by all means, will deliver going forward, and that's the crucial factor. In the longer run, if you're looking at our portfolio, we are seeing that there are addressing markets which is growing by 3 to 5% a year. Demographics in emerging markets are still good. Valuation is okay. That hasn't changed much over the last 5 years. It's not dirt cheap, but it's not expensive either, like it was back in 2010, 2011. I think that's most important seen from our point of view. In a low growth, no inflation, no interest rate world, we can see real drivers for the companies, addressing the needs of 6 billion people.
We are so looking forward to the continuation of this process. Thank you very much, Kristoffer, and thank you very much for watching.